Thanks everyone for attending. I've been asked today to provide a presentation on R&D tax relief, but with a principal focus on the changes, the upcoming changes that are coming into play. Obviously, on the title does say Introduction to R&D Tax Credits. I'm going to touch on that quite briefly because perhaps many of you are quite familiar with the relief anyway. The focus on today is more on what's been changed in the relief rather than going over some of the core or basic principles. So just to introduce myself, my name's Matthew Jones, founder and managing director at a company called Limestone Gray. So we are a chartered R&D tax credit consultancy. All we do is R&D tax credits. We don't do any other services. We help companies obviously make their R&D claims, whether they're large or small companies. I myself am a dual qualified chartered accountant and a chartered tax advisor. I've been doing R&D tax credits now, God, well over 10 years, I think, and experience of doing thousands of R&D claims. Okay, so what are R&D tax credits? I'll touch on this briefly, but essentially the important points to know here is that it's a form of corporation tax relief. So it is only claimable by limited companies. It can provide quite generous amount of relief. And some recent changes noted at the bottom there is that there's now a clear government focus on R&D tax credits, focus more around the relief's integrity, and also trying to make R&D tax credits fit for purpose in the modern business landscape. And that's what we're going to concentrate on shortly in this presentation. But the relief at the moment, there's two types of R&D tax credit relief around. You can have a small and medium-sized company relief, or the large company relief, which is called Research and Development Expenditure Credit, and you probably heard it being referred to as RDEC. Obviously, to access this SME relief, you have to qualify as an SME, the thresholds being quite large, fewer than 500 employees, and either turnover of less than 100 million euros or gross assets of less than 86 million. So, you know, most companies in Wales, especially startups, are obviously going to tick that box. When applying that, you do have to look at any shareholdings of 25% or above. So if, for argument's sake, you were 30% owned by a very large company, you may breach that threshold, even though if you're looking at your company in isolation, you're well within that. But obviously the SMEs would claim SME relief. However, there are some circumstances in which an SME can only claim under the RDEC. So they're kind of like pretending to be a large company. And those circumstances typically are where you're acting as a subcontractor for another entity, performing R&D services on their behalf. That's if you're doing that for a large company, university, or charity. Obviously, if you're doing it for an SME, it's them who claim, not you. And also, if you've received some grant funding, you might have to claim all or part of your costs under RDEC, depending on the nature of the grant. So the relief at the moment, companies can claim, this is how it stands today, up to 33 pence for every £1 spent on R&D activity. So if you're looking back on the R&D work you've done, that's the rate of relief that you can get, the maximum amount. And just a couple of figures there to illustrate the size of claims and, you know, the magnitude of the relief and the help it can provide businesses. The average claim values being for SME £54,000 and large company £225,000. So we're talking some quite sizable chunks of money here that's potentially available to a company. A couple of general misconceptions that we hear from businesses when it comes to R&D. Obviously, the main one that comes up all the time is that we don't feel we're doing R&D. And the reason why that comes up is because companies don't view their day-to-day activities as being R&D. It's just their day-to-day problem-solving tasks. But it's important to note that, you know, you don't have to be involved in laboratory research. You don't have to have PhDs on your payroll to be making an R&D relief claim. And the issue there is really down to the definition of R&D for tax purposes and people's perception of that term. The definition for tax purposes is much wider than people realize, and we'll touch on that as well before we get into the changes. But some of the other ones that we hear is the company is loss making, so wouldn't benefit. So we've done a claim for a company that was new to R&D tax credits, but had been doing R&D for several years, always made a loss, and never actually returned a profit. So never claimed because they viewed it as a reduction in their corporation tax bill, as a tax relief. If they're not paying corporation tax, how can they claim? But that's not true. So you're able to actually get some money back even if you've never paid a penny in corporation tax. So you should obviously still make a claim. Companies receive grants, so can't claim. This is also a misconception we often hear. If you've received a grant for R&D purposes, you would still likely be able to make an R&D tax relief claim on that. Like I said previously, there's instances where an SME has to claim as if they're a large company and do it through RDEC, and this is one of those things. So essentially what it'll do is alter your claim, principally in the size of the cash benefit you're getting back. You won't get as much, but certainly very much worthwhile still making a claim because it can top up that grant. You can still get some money. And another one we hear is the R&D wasn't successful. To be fair, it's probably easier to prove to HMRC you're doing R&D if it wasn't successful, because that obviously proves how technically difficult it was if you weren't able to do it. So that is a misconception we hear. You would still be able to make an R&D claim regardless of the outcome of the project. So that's something to bear in mind as well. So I wanted to try and make this a little bit useful. Instead of talking about examples of businesses that we've claimed for before, give you a little bit more down on the principles of how you identify whether something does or doesn't qualify for the relief. And this obviously is the biggest and most fundamental thing people need to understand when it comes to R&D tax credits, is whether or not a project can be taken forward and a claim be made for that. So essentially, for any limited company to go ahead and make an R&D claim, it needs to evidence to HMRC that it meets two conditions. The first one being it's able to evidence that it's got a defined development project that it's working on. And that is the relatively straightforward thing to be able to demonstrate. I'll explain a little bit more on that in a moment. And the second condition, which is the filter, the more complicated one, is that within that project, there's something called scientific or technological uncertainties present. Bit of a mouthful, but I'll explain what they mean by that in a moment. But let's stick with this first one. So having a defined development project. So HMRC describe essentially three different areas here. So your development project could be looking to develop something totally brand new and pioneering in your industry. So that's saying that there's nothing quite like it. It stands out. That can be in terms of a physical product or something I can touch. It can be in terms of a technological or scientific process. I say technological or scientific process because it can't be a business process. So things like engineering, construction, manufacturing would tick the box, but business processes wouldn't. It could be the development of software, services, or devices. Okay. Now, if you were in that position where you are creating something truly brand new, you might think to yourself, well, surely that would entitle me to an R&D claim. But that's not necessarily true because of the second condition, which we'll come on to in a moment. But sticking with this, to be fair, it is probably more rare to see a company that's truly developing something totally brand new that's never been seen before. Most companies' R&D projects will sit in the other two categories here. So the second one being where most sit, and that is saying, okay, I'm not creating something totally brand new here, but I'm looking to make appreciable improvements to something that already exists. Again, in terms of a physical product, a technological, scientific process, service, or software. And the third type, which may be a little bit more difficult to get, but it's certainly still possible, is when you're duplicating someone else's breakthrough. So if, for argument's sake, you are in an industry and one of your rivals has achieved an outcome, and you're looking to essentially mimic that, and crucially, you're not going to reverse engineer and rip them off. You're going to perform your own R&D to achieve that outcome, but essentially the outcome will be similar or the same to them. You can still make an R&D claim. So you don't have to be the first ones to cross the line, provided that other party obviously haven't shared the know-how on how that's done. So you kept it a trade secret. As noted there, most companies meet this condition, as most companies are looking to improve their products and their processes. And if that was the only condition that would make essentially most companies eligible for R&D tax relief, And you could have some absurd situations there where perhaps you've got a takeaway saying that their curry sauce is better than the one down the road. So they made appreciable improvements to their curry sauce. Can I have an R&D claim? Obviously, that would be absurd. So there needs to be a condition, therefore, that filters out all these into the eligible criteria. And that's that second condition. And this is the more important part. As noted there, the second qualifying rule is where the difficulty and uncertainty in identification sits. This is where it gets complicated. So the easiest thing to note is that the most important, thing to note is that HMRC are not interested in the end result of the project in terms of what it can and cannot do. So to explain this in a little bit more detail, I'm going to use an example. So going back to that previous slide, let's take an extreme example of a company that is developing a brand new product and it's never been seen before. Looks like it's going to be a huge success. People are putting their orders in, can't wait to get hold of it. Like I said previously, if you're in that position, you may think to yourself, well, that would entitle me to make an R&D tax relief claim on that. But that's not necessarily true. And the reason being, if I were to submit a claim to HMRC on that basis and that basis alone, it would be rejected, because HMRC would turn around and say, well, you've proved one thing and one thing alone. You've proved commercial innovation by being the first to achieve this product or process, but you haven't proved technological or scientific innovation. And R&D tax credits does not reward commercial innovation. It will only ever reward scientific or technological innovation. So you may think to yourself, well, how on earth would HMRC decide that, whether something is scientific or technologically innovative? Well, how they do this, so as an HMRC inspector, their focus when assessing your project is on the journey and not the outcome. So they'll take that outcome or that product, as great as it may be, and let's put it in a box and forget about it, essentially. I want to hear about the process of putting this together. I want to see whether or not it was technically uncertain for a competent professional to achieve or not. So let's take that example again of that brand new pioneering product. Let's say, for argument's sake, that the actual process of developing that product was relatively routine for someone competent in that field. It's not that technically challenging. You would not be entitled to an R&D tax credit claim despite the commercially innovative nature of the outcome. And let's flip that. Let's say what's in the box is only a marginal improvement on what's already been achieved or been developed. However, it was very technically difficult and uncertain to achieve that marginal gain. You would be entitled to an R&D tax credit claim, and you can push it even further. And let's say what's in that box is worse than what's already available. You obviously tried to do something better but failed, or there's nothing in the box because you weren't successful at all. You weren't able to achieve that. You would, provided you were able to demonstrate to HMRC that you encountered significant technical uncertainties on that journey, you would still be entitled to an R&D claim, because the output and what's in that box doesn't matter to HMRC. Their focus, like I say, is on that process. So as noted there, they look at the work involved in getting there and if it contained qualifying challenges that were difficult to overcome. So qualifying challenges cannot be business related. They must be scientific or technological. So business related challenges could be, will it be commercially successful? Will I be able to get the funding? Can I hire the right staff with the relevant qualifications to be able to achieve this? Those are irrelevant points to HMRC. It's got to be scientific or technological in nature. And the key point here is when you think about these challenges in that R&D process, an assessment needs to be made to determine if the solutions to the challenges were A, readily deducible by a competent professional in the field. So if they were routine challenges that were easy to solve, you would not be able to overcome them. You would not be able to claim them. And also, if those challenges were able to be resolved from using publicly available information, you wouldn't be able to include that challenge either. So if it was readily deducible by a competent professional in the field, you probably wouldn't claim for that anyway, because presumably it didn't take much time or costs to overcome that. So there's nothing lost there really. And if it was available in the public domain, again, you wouldn't be able to claim that, because that kind of proves to HMRC that the R&D was new to you rather than new to industry. So new to you R&D is never going to be something that you can claim R&D tax relief on. It's only whether or not it's regarded as new to the industry that we're looking for. Okay, just to briefly touch on the cost. So let's say, for argument's sake, you are comfortable that you can tick the boxes, that you've got a defined development project and some genuine scientific and technological uncertainties to overcome. Then what can you claim for? So again, this is how it stands today, and how you would make a claim for past R&D work. And we'll touch on the changes shortly. But as it stands at the moment, you would be able to claim for your payroll costs, so staff involved in the R&D. So you're talking about the gross salary, employer's NI, and employer's pension. EPW stands for externally provided workers. So they are essentially akin to agency staff. So not on your books, but they are workers that you supervise and direct. They would be able to be included. Subcontractors, so if you outsource specific tasks such as testing services, fabrication services, whatever it may be to a third party to do on your behalf, that can go in. Consumable materials, so that's crucially materials wasted in the R&D process. So for argument's sake, failed prototypes, you'd be able to include that. And then software. So software, you'd be able to include only software that is downloadable and installable onto your computer. So not software as a service, cloud hosted solutions aren't included here, but more on that later, because that is changing. So those are the costs you'd be able to claim, and obviously there's various rules around each of those in terms of restrictions, what you can and cannot include, what rates get applied. But essentially, if for argument's sake a company had £100,000 of spend, then and making an SME claim, then they're looking at potentially up to £33,000 back from the government for that work. So how an R&D claim is made, just briefly, two points essentially. There's the calculation, which is based on the costs in your accounts. The costs get recognised in your accounts on the wages, materials, and so forth. And then also a project report. So a project report needs to be written that essentially illustrates to HMRC what projects you're hoping to claim for, or a sample of at least. And obviously that needs to be prepared right. You were kind of armed with a bit of information there to help you with that, knowing that HMRC are interested in the journey and not the outcome. That's important, as most people who are unfamiliar with R&D tax credits and who would write their own documentation would prepare what would essentially read as a marketing leaflet. And that is not correct. That's not what you want to do. You want to be able to describe that journey and the uncertainties. That's the key information that HMRC need. And deadlines to get that in. So you have 2 years from the end of your accounting period in which to submit a claim. So they do give you a bit of time to get that in, but after that date it is lost. Unfortunately, you won't be able to make a claim. And there's more on that in a moment, because there is an amendment being made to that in the R&D tax credit reforms. So on to that, and so that briefly, and I know it was quite a lot of information and perhaps delivered very quickly to get through it, but that is a basic outline of the relief, what we're looking for in terms of the eligibility criteria, and it is the same for all businesses, whether they're in pharmaceutical or software development. That technical uncertainty along the journey part of that's how they define it, and the costs, and that's how R&D has been for quite a long time. R&D tax credits was something that came in the year 2000. And over the last 12 months, there's been more changes in R&D tax relief than there's been in the last 22, 23 years. So the main focus of this presentation is to concentrate on these upcoming changes that are about to be implemented from the 1st of April. So In March 21, the government launched some consultations, and essentially what they were looking to do is get information, mainly on the ways in which companies interact with R&D tax credits in terms of, how they prepare them, and also to look at information on the applicability of the current regime in light with how modern businesses do R&D and see if they still fit. And as a result of that feedback, some reforms were announced during the 2021 autumn budget and released in the R&D tax relief report. So there's going to be these changes and then some further changes that were announced in the budget last year. So concentrating on these first. So from the 1st of April 2023, a number of measures introduced covering 3 or 4 areas, I should say, really. So fraudulent activity and abuse. So that's a big issue that they want to try and target. Secondly, is refocusing innovation in the UK, encouraging it to take place here in the UK. Altering the eligible cost categories, and also extending the definition of what is qualifying R&D. These measures will affect the way in which companies make an R&D tax credit claim and the costs that they can include in that. Now, I've got slides on the fraudulent and UK and eligible costs, but not on the definition of R&D, because that's just a very quick small change, but also a fundamental change. So to touch on that before we move on, extending the definition of R&D, what's changed there is being able to include advancements in pure mathematics. So previously that wasn't something that was claimable, now it is. Or at least for accounting periods starting on or after 1st of April 23, it will be. And what that stems from is essentially a desire to support fintech businesses. So advancements in mathematics and is something that takes place obviously in fintech industry, in the software that they develop, and typically, or to date, that hasn't been claimable, but they want to be able to support these fintech businesses, and adding that in is going to hopefully greatly help those businesses with their R&D on the development of their algorithms. So tackling each one in turn. So tackling fraudulent activity and abuse first. So there's a big concern in the government and industry partners over the abuse of the R&D scheme and boundary pushing. Boundary pushing being including stuff in your R&D claim that isn't really R&D. So it's been done by unregulated and unscrupulous agencies. So there's obviously some bad actors in the industry in terms of providing R&D tax credit advice, typically the unregulated businesses. And also some abuse from companies taking advantage of the payable tax credits. So that's where, like I said previously, a company doesn't need to have made a penny in profit or paid anything in corporation tax, and they can still get money back from the government. So what they had was these fake businesses being set up, including fake expenditure in that, and essentially putting a claim in with HMRC to get a payable tax credit. They run off with the money, the company just dissolves, and obviously it costs the government quite a lot of money. So they're trying to tackle that as well. So evidence has shown us a growing in recent years and is estimated around £469 million of error and fraud. That's error and fraud, obviously included in that, but as you can see, it's quite a sizable amount of money. So there are already measures in place to try and deal with that came in before this. So one being additional inspectors being taken on in the R&D team to try and look at more claims. And also the introduction of the PAYE cap launched in April, which restricted a payable credit to £20,000 plus 3 times a company's PAYE and NI liability. So these fake companies presumably had no one on the payroll. So that's HMRC's exposure gets kind of minimized to £20,000 if those got through and got paid out. So it's trying to reduce that exposure. So it's felt at least that they haven't created enough of a deterrent. So they're looking to make some more changes. So the changes are coming in for account periods on or after 1st of April 23 are listed here. So the main ones are listed here. So we've got first one, all R&D tax credit claims will be made digitally. As a company, we've always done our claims digitally, and I'm quite surprised anyone does it via post or anything, but I'm guessing some people are still submitting them by post to try and get them through. So that's going to be a change that's coming in, and the digital claims themselves will be need to be made with a lot more technical detail. Now, as a company, we've always supplied project summaries that detail the projects, but a lot of R&D consultancies have just put cost-only claims in, so they will just submit the claims and no technical report, and those, you know, at the end of the day, HMRC can't inspect them all, so a lot of them just get paid out. So from now on, they're going to mandate that a technical report is prepared and supplied with the claim. Each claim will be endorsed by a named senior officer of the company. So that's important. The company themselves have to put their name to it going forward, to show that they've reviewed it and they're comfortable with what's being said or been declared in their name. And also, I'll just jump that second one because I come back at that. Companies will need to inform HMRC. I'll jump that and come back to that in a moment. But also, the claims themselves will need to name the actual advisor that was put together the claim for you, and that's obviously an important one, a positive one. Some of you might be surprised to say, well, isn't that already done? But it's not. What HMRC have found is that a lot of the unscrupulous agencies who provide R&D tax credit services would often draft an R&D claim and the report and then hand it over to the company to get their accountant to submit it. And essentially in HMRC's eyes, it looks like the accountant prepared it then. So they were hiding behind the accountant. But with this now, the advisor will be named. And then obviously if they pick out any suspicious activity, they'll be able to search every claim that advisor has been involved in, which is a positive, obviously, to drive those companies out. It's got on the bottom there, the changes are welcome. However, some will create a lot of red tape. And going back to that one about companies needing to inform HMRC in advance that they plan to make a claim. Now, for me, I feel all the changes there are a positive, except that one. So from 1st of April, for companies starting on or after 1st of April 23, if in that period you are new to R&D tax credits, so you never made a claim before, or you haven't claimed for the previous 3 years, you will have to tell HMRC within 6 months of the end of that accounting period that you want to make an R&D tax relief claim. So that to me is a negative development, because it does nothing to support, you know, genuine companies that might be a bit slow with their admin. So if a company is doing qualifying R&D but forgets to notify HMRC within 6 months of the end of that year, you wouldn't have even had to put your accounts together by that point, or paid your tax, or submitted a corporation tax return. However, within 6 months, if you forgot to tell HMRC, they won't let you then submit an R&D claim. So that is a very bad change in my mind, because it is penalising genuine companies. So there's a form being released by HMRC in order to do that. If you're a company that's made R&D claims on an ongoing basis and haven't stopped, you won't have to worry about that change. It's mainly going to affect startup businesses who are new, are going to be making their first claim for an accounting period starting on or after 1st of April 23. And what I would recommend to businesses, even if they have they're not sure whether or what they're doing will qualify at that point, or whether they will go ahead and make an R&D claim, just submit the declaration to say it to HMRC that you will. It doesn't force you to have to put one in, but at least it leaves your options open then. So I would recommend to all businesses to just say to HMRC, look, an R&D claim will be coming, even if you subsequently don't submit one, because maybe later down the line you decide that the quantum of the claim is too small to warrant the time, or perhaps you find out later down the line you don't feel that you qualify, but at least then you've kept your options open. So that's what they're doing to try and stop the abuse of the R&D tax relief scheme. Another change to look into is refocus innovation here in the UK. So the current rules as they stand, under the SME relief, companies are able to claim some direct costs of research and development, which we went through earlier, such as payroll costs, consumable materials, software, and so forth. but they've also been able to claim for payments for subcontracted R&D activities in general. So whether or not it was a university, charity, a limited company, a sole trader, whoever was doing it, you'd be able to put that in your SME claim. Under the RDEC, the large company rules, they've also been able to claim some direct costs of R&D, such as the wages and materials. But it's only been restricted to certain payments for subcontracted R&D activity to qualifying bodies, so such as universities, charities. So if you subcontracted R&D activities to another limited company, you wouldn't be able to claim them under RDEC. And another note there, just independent contributions to charities, universities, and health bodies for their own research was something that's been claimable under RDEC. But what's changing here is the government wants to refocus the R&D in the UK, so they're making the following changes. So they're restricting the options for subcontracted R&D and also restricting the options for externally provided workers. So essentially, subcontracted R&D, so whereas before an SME might use a developer in, say, India to do some software development tasks and maybe spend some money on that, for companies starting on after 1st of April 23, you won't be able to include them anymore because they're an overseas subcontractor. If you were using a UK-based subcontractor, then obviously you can carry on including them in your R&D claim. So that's obviously a big change. I think a negative one as well, because obviously it denies access to some expertise overseas, which isn't good, because sometimes you can't get the right subcontractor here in the UK, and obviously often is the case that UK subcontractors can be a lot more expensive than overseas ones. So that is a negative change, but that's coming into play. And also for externally provided workers, they need to be on a UK payroll. So if you're using externally provided workers abroad, again, they're not going to be claimable. So are there going to be any exemptions to this change in subcontractors and externally provided workers? So it mentions there obviously the cost of software and clinical trial volunteers and data and cloud sourced overseas. So they're still going to be claimable whether they're UK based or overseas. But in terms of the exemptions to actually using subcontractors, overseas subcontractors or overseas externally provided workers, there's pretty much no exemptions to that. The only exemptions HMRC talk about are very extreme. And as an example, company developing something for volcano research would still be able to use subcontractors overseas because we have no volcanoes here in the UK to do any testing or so forth. So something like that, something as extreme as that, are the examples that HMRC use. So you wouldn't be able to use an exemption and say, you know, well, I need access to specialized talent. I can't find it here in the UK, so I have to go overseas. HMRC don't care about that, which is you know, not great, you know. And most companies use them overseas subcontractors, one for the specialized talent, but also because it's usually cheaper and they probably have a long-standing relationship with a good subcontractor they have overseas. So now with these changes, they're going to have to make some big decisions. Do you maintain your relationship with that overseas subcontractor or externally provided worker, and resign to the fact that you're not going to be able to include them in your R&D claim anymore? Or do you swap and find a subcontractor or externally provided workers here in the UK and still be able to include them? So that's a big decision some businesses are going to have to make. Another change is the expansion of cost categories. So this comes down mainly to reviews concentrating on fintech. So trying to make R&D tax relief fit for, you know, that modern fintech type development work. And the change that's coming in is focusing on cloud computing and data costs. So as I noted previously, when you claim software as it stands today, it had to be downloadable and installable software. So something you can install on your local, essentially. So if you logged into the software through a web browser, you wouldn't that wouldn't come into it, or SaaS software. But now going forward, you will, because most software these days is cloud hosted, so they needed to update that. And also license payments for data sets as well. That's something that's going to come in. So provided the data's not got an ongoing value in your business for commercial purposes, so it's used for R&D and that's its only use, you'd be able to include the cost of that data set as well. So it's thought that these changes will encourage greater R&D spend, especially obviously in software and fintech development, and try and ensure the relief is more modern and fit for current R&D techniques used by businesses. So next one is the relief rate changes. So these are the newer announcements that came in the autumn budget. So these aren't, well, they're not great for SMEs, and I'll explain why. So during the autumn budget, the Chancellor announced a change to the relief rates, generosity increasing for RDEC schemes and substantially decreasing for SMEs. So for expenditure on or after 1st of April 23, the RDEC rate, so the large company rate, is to increase, or the cash benefit rate is to increase from 10.5 to 15%. So obviously that's a positive. Large companies, but also SMEs have got grant funded projects or are being subcontracted to do R&D on say a large company's behalf. They're going to benefit because they're going to have a bigger cash benefit. Whereas on the flip side, the negative here is that SME relief is set to decrease substantially. So as it stands today, the relief provides up to 33 pence in every pound of qualifying expenditure. That's coming down to 19 pence in every pound. So that's quite a sizable cut, which is, you know, there's been a lot of negative press around that because essentially the Chancellor's taking from the SME to give to the PLC, which, you know, is not a great thing to be doing. It's been touted as a way of cracking down on fraud because there's more fraud in SME relief than there is in the large company relief. But obviously that's not a great way of doing it because it's penalising genuine claimant companies. So that is the rate changes that are coming in. So there's live R&D tax credit consultation. So this is what's going on today. So this is currently live. So the Treasury has recently launched an 8-week consultation on a proposal of a single R&D scheme, which if successful would change a select number of current rules and regulations. So as at the moment, as noted previously, there's two types of R&D claim. There's the SME relief and there's RDEC relief. And to a lot of businesses, they find that quite confusing to have two. And also it's quite unusual for a country to have two schemes. So what they're looking to do is essentially do away with SME and expand RDEC to cover SMEs as well. So if you look back at that changes in the rates, with the new reduction in the SME relief, the actual cash benefit for an SME will range anything from as low as 9% up to a high of 19%, depending on their starting position, whether the company was profitable, loss-making, or break-even. So it's the actual rate you achieve depends on your starting position in that regard. So it kind of introduces quite a bit of uncertainty about, well, what am I going to get for my R&D claim? So there's quite a big banding. But you can see from that banding that essentially a profitable business who's reducing their corporation tax will gain a benefit of roughly 16%, whereas a loss-making company will get 19%. But that 16% is very close to the 15% on RDEC. So they're kind of aligning them to be quite similar. So when they do come to be a single scheme, the rates will interlock. So what they're looking to do is create one single scheme, and it's certainly going to be based on the RDEC scheme rather than the SME scheme, with some changes to RDEC. So as I noticed there, the consultation stress, a single scheme should be based on the current RDEC. The consultation requests feedback from R&D intensive companies and those representing them, such as R&D tax credit consultancies. And once a decision has been made on whether or not to create a single relief, a final rate will be announced at a future fiscal event, which might be the 15th of March, I believe, is the spring budget. And it says there will not be consulted on. But when it does come into play, the government hopes to bring this in from 1st of April 24. So it will be brought in quite quickly. So it'll be based on RDEC, but they're looking at the consultation focusing on changes to that, because obviously with RDEC as it stands at the moment, you can't include limited company subcontractors. But if an SME is undertaking R&D, that would be quite a negative impact on them to not be able to include their subcontractors in a claim like they currently can under the SME relief. So there's going to be obviously, or presumably at least, there will be some amendments to RDEC to just sort that out. So further info on the R&D tax credit reform can be found on our website. So I would recommend looking at our blog, because we keep updating that with the latest changes as and when info comes out. And we got some more info on there, and happy to have a chat with anyone who wants to look at this in more detail, perhaps you know, the eligibility of their business, but also what these changes are going to mean for them in terms of the impact on their business going forward, and whether or not there's some opportunities to make some changes in the way the R&D is done in order to minimize any negative impact and maybe take advantage of some of the positives as well. So yeah, that's pretty much it in a nutshell. So there's a little bit about us as a company there, but that is essentially what we know about what's being changed at the moment. So it's quite fluid. I think there's going to be some big announcements in the March budget, specifically around combining the R&D schemes and whether or not they look to revisit the rate of relief on SMEs given the negative publicity that it's had. It's thought that some larger SMEs that rely on the relief are looking to move a lot of R&D abroad as a result of that. So whether or not the government backtracks, or when they do unify the scheme, perhaps they will make the whole scheme bigger, maybe 20% for all businesses. Who knows? We don't know at the moment. So we're going to wait for that and hopefully hear something about that in the March spring budget. But yeah, so essentially that's what I wanted to cover. I know there's a lot of info there to go through, and it's impossible to go through every single part of that in detail. So if anyone does have any questions or want me to revisit anything, please let me know. And on that slide is my contact details. I think probably these slides might be provided afterwards, so you'll have them there. But if you wanted to ask me questions, you know, in private, you don't want to discuss your specific R&D aspects on here, or you think of some questions later on, you can use those contact details to reach out to me. But yeah, I hope you found it useful.
Hi, Matthew. That's a lot of information into that one to get into us in just under an hour. So well done on that. Does anyone have any questions now while you've got the expert on screen with you? Go on then, Omar, over to you.
Yeah. Thank you, Matthew. So we're a software development company, and we regularly submit R&D claims. Now, we submitted our recent one in January for the previous tax year, which has happened to be November 21, if I'm right. Now, usually I do this on a timeline in December. So at the end of this year, I'll be looking at the tax year 22. Now, what will the inland revenue, is it wise for me to do a submission prior the April 2023 for, you know, like bring it forward? Or would I be based on the new rules if I ended up doing it in December for the previous tax year?
No, so the rules, so there's two things there. The rules are split between, so some changes in the eligible categories are going to come in for account periods starting on or after 1st of April 23. So for those particular rules, you might want to look at your year-end date and see whether or not, you know, if it's going to have a major impact, whether there's a logic for changing your year-end date to try and work around those. But in terms of the rate changes, it's not going to be, when it comes in on the 1st of April, what you'll have is, if your account period spans that period, you'll have part of your claim under the old rates, part of your claims under your new rates. So there wouldn't be anything needed to be done in that sense. So you wouldn't be, you know, say if your account period ended May 23 and you're then in the low rates, it's not going to taint that previous expenditure that you had before that. You'll still get the higher rate on those. But yeah, it'll just be the last couple of months of the year that you'll take that dip in the rates, if that makes sense.
Okay, so just to cut, so basically that means a lot of firms are not really going to be affected for a little while.
Yeah,
Um,
yeah, because
yeah.
R&D tax credits is always done in after you've done the R&D work. So at the moment, we are predominantly claiming for the years ending 21 and 22 for businesses. So they're not going to be affected yet. In terms of actually seeing these rates and that we probably won't see it for another 12, 18 months before we put in claims where you can see the substantial reduction in that. But yeah, the issue you have, obviously we deal with it in arrears, but the businesses themselves need a plan ahead. So if, for argument's sake, you had substantial expenditure on R&D, can you bring it forward to take advantage of that relief? There's obviously things to consider there. Also, if you're using overseas subcontractors and they are a huge chunk of your claim, should you be looking now to try and find a UK alternative? There's a lot to think about. So yeah, we're obviously given these presentations now as and when we hear the info to give people time to think about it and see whether or not they can try and change how they do in their R&D to not be negatively impacted.
Thank you.
Okay.
Okay, Peter, you've got your hand up. Do you want to come off mic there?
Yeah, can you hear me? Okay. Yeah,
Yep.
Thank you, Matthew. Just to check my understanding, we are doing some, or we're planning some clinical trials in the next couple of months, and some of these trials will be done overseas, some in India, some in the EU. And I'm not quite sure if these clinical trial volunteers, the expense for that, is that now includable or not?
It is. So payments to clinical trial volunteers is something you can claim for, and you've always been able to do it. The reason why that's still staying into play, even though it's overseas, is for things like presumably what you're doing, it might be only relevant to do that overseas, given the regulatory regime in a specific country. And, you know, doing things like vaccine research, you probably want to do it in a country that has a high instance of a specific illness to test its efficacy. So if you haven't got an illness going around in the UK, there would be no point testing. You wouldn't be able to trial it here in the UK because you wouldn't be able to gauge its effectiveness. So that's fine, but subcontracted R&D activity wouldn't. So if you are using subcontractors over there to administer it or run the program over there, that side of it wouldn't be claimable. But the actual payments you make to those people to be the ones being experimented on, if you will, then that aspect of it would.
Yeah, and so the people who run, it's because it's run in the UK and overseas. So the payment to UK clinical staff could also be included, because there would be in fact be theoretically not really subcontracted. We just pay the clinics or the hospital trusts. Suppose it's a bit of a grey area there. Yeah,
you'd want to make sure that your audit trail is well defined for this. So obviously you are, when it comes to UK based, you know, if you're subcontractor in clinical trials, it doesn't matter because there's no restriction on that coming into play. But overseas, you want to be made clear on any expenditure you have that is payments to the clinical trial volunteers for those that.
Okay, so that's for the overseas. Okay, we can split that out. And for for those part of the trials that run in the UK, obviously the volunteers, the patients themselves are eligible. However, would be, because that's only part of a cost for a clinical trial. The rest is you basically have to pay a hospital trust for use of their equipment, of the consultants, nurses, rooms, time, and so on. Is that includable?
Yeah, yes. My advice though would be to split the two costs. The reason being, if we look to include the hospital and the doctors and nurses and so forth, obviously it depends on exactly what they're doing as to their eligibility. But let's say we're comfortable that is eligible. You're then looking at a restriction in the rates that can be applied when you outsource R&D activity to a third party. You can't include 100% of the costs. However, there's no such restriction on that on the clinical trial volunteers. So let's say if that's a significant expense, you don't want to have to apply the subcontractor restriction to that if it's all lumped into one thing. So if you can separate them out, you would then be able to include a higher amount of that clinical trial volunteer cost.
Okay, I'll probably come back to you then in good time.
Yeah, no worries.
Okay, thank you very much.
Thanks, Peter. Jonathan, you've got your hand up.
Yeah, just a minor point of clarification. Thanks very much, Matthew, for the presentation. It's really useful and excellent. On the relief rate changes, you mentioned the SME decrease in rate from 33% down to 19%, and then you said it was depending on the company's financial position. Can you just elaborate on that a little bit?
Yeah.
Where it's loss making or not? Is that correct? Or
yeah. So the actual size of the benefit an SME gets under the SME relief, or at least the benefit you can attribute to the R&D claim, I should say, is dependent on the financial position of the company before a claim is made. Now, it's the financial position in the tax return I'm interested in, not the financial position in the accounts, because they can be different because of the adjustments that get made to a tax return, such as annual investment allowance and so forth, if they invest in heavy and fixed assets. But looking at the tax return, so looking at that financial position, so essentially, if they're profitable, and I'll use today's rates for this example, so where you always hear up to 33% is the cash benefit you can get. So if it's a profitable business, they would have the R&D claim will give them an extra deduction and a cash benefit of 25% of their corporation tax. Now, that's not, and a loss-making business will get 33. Now, that's not to say that a loss-making business gets more than a profitable business. The reason being, a profitable business would have already received some tax relief on its expenditure. Just normally, all businesses do. So they get standard relief of 19 pence in the pound, 19% corporation tax rate on their current expenditure. The R&D claim will give them an additional 25 pence on the pound. So obviously combined, they're the ones who benefit best from it. Whereas a loss-making company has presumably had no tax relief on their expenditure because they've had no income to offset it against. The R&D claim comes in and takes them from 0 to 33. So on the face of it, it does look like a loss-making SME gets a higher cash benefit than the profitable one, but they don't. They actually get less. And the reason why it fluctuates is how this is calculated. So as it stands at the moment, a profitable business, so if a company has £100,000 of qualifying R&D spend, and they are a profitable business, they'll get an additional deduction of £130,000 off their profit. That £130,000 times 19% corporation tax rate gives you 25%. That's the cash benefit they will have. Let's say a loss-making company has spent £100,000 on R&D, and I'm going to say that their loss is greater than £100,000 because it gets complicated otherwise. So they've spent 100 grand. They will get an additional deduction of 130,000 like the profitable one did. So now the losses attributable to R&D is now £230,000. 100 grand plus the enhancement is 230. Now, instead of getting relief at 19% of the corporation tax rate, they can't get that because they haven't got income to offset. So all they can do is either leave that and carry it forward so that when they do have income, they can offset that. And then obviously they will receive their 19% going forward. Or they can sell that loss to HMRC. But if you sell that loss, you take it as cut. HMRC don't let you have the full rebate back. So you can sell it for 14.5%. That's the payroll tax credit rate. So you give up your 230 grand, they write you a check for equal to 14.5%, which comes out to £33,330. So that's where the 33% comes from. So it's complicated in the way SME relief is calculated and all those steps. RDEC is different. So whether you're loss-making, break-even or profitable, you get the fixed amount and you get it paid to you no matter what. So you know exactly where you stand. So that's one of the positives about changing to an RDEC-based system is the certainty about what the cash benefit will be. Does that make sense? Obviously, I mentioned it can be as low as 9% as well for break-even businesses. And the reason why that is so low is because obviously if you got the £100,000 of R&D spend in the tax return, they've not made a loss or profit, it's just zero. They will then move to £130,000 loss, which then they can sell at 14.5 which gives you your 19% back. So it's quite complicated with the SME calculations, how it's done. But like I say, because of the complexity and how that works and how it depends so heavily on the starting position, it gives businesses uncertainty around, well, how much am I really going to get back from this? I don't really know until the calculation's done, essentially. But like I said, the RDEC, if that comes in, you'll have a little bit more clarity on if you spend 100 grand, you get on the current rates 15 grand back, and you know you'll get that money.
Right. So thanks, Matthew.
That's okay. I know that's quite complex. So if you want me to jot anything down, some sums on a spreadsheet or something, let me know, and I can provide the illustrative examples.
That'd be great. I'll be in touch. Thank you.
Right.
Thanks, Jonathan. Anyone else with a quick question? Is there any quick questions in there? As Matthew has said, that he's left the details up there. That if you think of anything when you come off the call now and think, oh, I should have asked that, or something that you didn't want to discuss in front of others, then just drop him an email there. If you send your slides over to me, I can get them sent out then to those on the call and anyone not here. And if anybody would like the recording of this, just to go through anything again, then let me know in the chat there, and I can send the recording to you once that's available. Usually takes about 24 hours once it goes off for editing there. And as long as you filled in your AG3s and sent them back to me, I will release the information that you want on that one there. So thanks, Matthew, for giving your time up this morning.
No problem.
If anyone else needs a reminder, just in case on the way home, it is Valentine's Day today. So just putting that one up there for anyone who may have forgotten. Hopefully we'll see you on the next presentation soon. There's one tomorrow, which is pitching for the art of pitching for investment. So if that's one that interests you, then jump onto the Eventbrite there. Yes, Jonathan, I'll send the recording out to you, not a problem there. Have a good day, enjoy the rest of your day. We'll see you soon. Thanks, Matthew. Thanks, everyone.
Thanks, everyone.
Bye.
Bye.